Hi, welcome to Market Alert for Thursday, the 3rd of October 2019. So yesterday, Bitcoin traded flat, which means sideways, not a lot of volatility after a so-called fake breakout. Bitcoin hovered around 8,300. So let's have a look, see what's going on. We'll start off with the daily chart, and you can see that into a bit of a quiet consolidation phase here, just below the 200 bar moving average. That said, prices have stopped making lows, and what we're looking for is a break above the 200 MA in the daily chart. In the 4 hour, similar thing, that's what we're going to be looking for at the moment. The market also sideways there, you can see this. However, the 20 bar moving average, the green line, is now above the 50 there as well, having closed above the 20 with some selling pressure here. You can see how it held prices and now starting to move to the upside. So what I'd be inclined to do to test how much momentum this market's got is to draw from this high to this low, a 76% retracement, and you can see prices there just stopping at this level. So a close above 84.46 is required to move prices to the upside, or that's the initial move there. And then yesterday the market very quiet. So you can see prices trading up to the 200 MA, then pulling back, and then again trading to the 200 and pulling back as well. But if you look closely here, you will see how the market's moved higher and then traded sideways. So from this low to this high, that's the market's up to this point, the market's low and high. So if you go from this low to this high, you'll understand why prices failed to move lower. And there are two reasons. First of all, for me the most important, the market sat at the 76% retracement, and also the low from the previous day, and you can see how this was support over here as well. So a quiet day we could do with this lift in a bit. Bitcoin up on the overnight, apparently due to a lot of trade in Hong Kong, even though they've got the riots. Headline this morning, we'll just show you this. So you can see here, Bitcoin trading spikes in Hong Kong as political crisis worsens. So that's the reason, apparently, for the up move that you see there, where the market's broke above the 200 bar moving average and now trading to it. This is encouraging. At least there's a bit more volatility, and that's what we want to see. Yesterday certainly very quiet, as it said in the main news there, that the market was flat. In this situation here, where you've got prices giving a signal to the downside, you need to see the market take out the 200 MA and the DP level. Failure to do this, we'll see prices find some sort of support and possibly start to do this. So just keep an eye on that sort of action, where you're trading down to the 200 MA, having traded above it there. Okay, let's have a look at what was happening in the stock markets. A lot going on yesterday. Markets feel the burn as global growth scare accelerates. What they mean by burn is Bernie Sanders. He's had to drop out of the presidential electoral race due to a heart condition, and that means that Elizabeth Warren is open to pick up the votes. And I won't say any more on that. I was tempted, but I'll refrain. So in the Dow yesterday, let's start off with the daily so we can see what's going on. In fact, we'll go back one step further. And yesterday I spoke about this, and have done for the last several days, about how the Dow has seen a lot more corrections of late, and how we were due for one. Well, this started yesterday. As you can see here, the implied volatility also moving higher, 1769, 1560, as the market moved sharply lower yesterday. We'd already closed below the 20 bar moving average, which is why when we look at the implied volatility this way, I'd already forewarned. And this is a great visual I have to do all of this manually at the moment. Should get it put into a charting package really. But for what time it takes, it's a brilliant indicator, and it's real time. It doesn't really lag either, because the implied volatility is the insurance measurement component of the option, the premium, and if the traders are aware of what's coming, then they will load it, and here you can see that we're now starting to move to the upside. So we'll be looking for this sort of area. And also, if we switch back to the main chart, which is here, important thing here, 200 bar MA in the daily chart. So watch for this level. Also the 76% retracement as well, should prices continue to move lower. So you've got a situation where interest rates have been reduced, the threat of printing, the repo market printing 75 billion on average a night to keep the banking liquidity alive and well. First time since 2006, I think, for the repo market. Was it 11? I can't remember. Anyway, it's been a while. There's definitely something wrong in the banking sector. And then combined with obviously with the yield as well, the inversion in the yield curve, slowing global growth. No surprise to me or anybody that's watched the market overview, even from May, where we've talked about the inversion in the yield curve, the global slowdown and the recession that is on its way. Believe it or not, entirely up to yourself. But as I've said before, yield curve inversion has never failed to see a recession follow within 16 months to 2 years thereafter. Could be sooner, given that we're still coming off the back of the crisis from 2008 as well. Anyway, back to the Dow. It's important to have all of the background information. We can see that yesterday the market had already closed was already well below the 200 bar MA from the previous day when we saw the manufacturing figures. So this is the previous day, and all the way through the pre-market session yesterday, the Dow was on the downside. There you go, below the 200 bar moving average. So here you see the market open and then straight down, bit of buying pressure, and then the market just sailed all the way to the downside. Big move yesterday from the open down to the low of yesterday was a 459 point drop in prices there. And then before the close, we saw a bit of a pullback there. No doubt the plunge protection team bringing the market back there. But overnight, price is not making any great strides at the moment, getting close to the 200 bar MA. You will get a bounce. You always get a bounce in a down move. So don't be surprised if you see prices retrace quite markedly in this market today. Also, tomorrow is non-farm payrolls day. Today, just ISM manufacturing PMI at 3 p.m. And apparently this is what's been sending the market lower for the last couple of days of manufacturing figures, which is really odd because the market's ignored all economic data for years. And all of a sudden, it's now becoming relevant again, which is very odd, I have to say. Certainly the last 3 years, the market has moved because Trump's been sending out his tweets, as we've seen, and his trade deal with China. But all of a sudden, manufacturing figures and global slowdown is taking a priority. And finally, in the pound for yesterday, obviously the pound's still waiting to see what Boris has got up his sleeve. Sideways yesterday, there was a nice trade, wrong chart. Let's go to the 15-minute to the short side. Lovely setup. The market signal just below the 200 MA and then closing below the DP. The market moved lower. If we measure up from where the market opened, as you'll see from there, down to there, the market stops at 76% and then moves lower once more. Finds a bit of support, see the market tested with the blue bar, and then moving back to the upside there. As the Conservative Party conference was on yesterday, whether that made any difference, I do not know. Didn't watch it, no interest. But, yeah, so the pound coming back yesterday, not a great range, but a bit of volatility there. Certainly, that sort of signal setup is what you're looking for, where the signal's below on the short side, the 200 bar moving average, and then obviously the opposite for the long side. Okay, that will do for this one. So let's see how the Dow fares today, and the pound, and see if we can get a bit more movement in Bitcoin. You can see there just catching up, just closing below the 200 MA at the moment, a bit of selling around. You want to see this continue lower, as it's in an area where it is likely to find support. So again, see how that one pans out as well. Just if you are short, you just want to be careful about the market pulling back there. And the key there for me would be, just get rid of this, is to get that stop to break even as soon as possible, just in case you get a close back. You can see there's prices are trying to do that at the moment. But once broken, there's no problem in actually getting out, taking the profit, and then seeing if the market does break, wait for it to come back, and then see this as a resistance, and then do this. So no problem there. Instead of waiting for the market to come back and take the stop out, you trade what you see. That's the key there. Okay, that will do it for this one. If there is anything else to report, I'll let you know. But otherwise, as ever, thanks for watching. See you in the next one.